In the spirit of tax time, we're releasing a short video today with some quick tips to reduce your taxes owing when you have capital gains, specifically surrounding the investments within your trading accounts. You may not be aware, but there are ways to increase your total profits in your investment accounts by claiming some eligible expenses. Hi everyone, and welcome back to The Independent Dollar. We make new videos every week on personal finance topics in a way that is straightforward and easy to understand. Today we're going to share with you how to lower your taxes by showing you exactly how to claim some of the common investment fees on your tax return. In Canada, if you buy and sell stock in a non-registered account, regardless of whether or not you made a profit, you are required to disclose that on your taxes. Now, for those of us that were unlucky and did incur a capital loss, the good news is that for those investments within our non-registered accounts, so outside of your tax-free savings account and RSP, for example, you're able to carry forward those capital losses to be used in future years against your capital gains. However, during years when you've decided to lock in some of those gains and sell your investments for a profit, CRA will be looking forward to taxing those earnings at the full inclusion rate of 50%. This means half of what you made will be added to your taxable income. So how can we get that number even lower? One way, which we're focusing on today, is to keep a clean record of all of your transactions and fees so you can claim them on your tax return and reduce your total taxes owing. Let me show you what I mean. Let's assume that you bought $100 worth of stock that is now trading at $300. This is now an opportunity to sell that position for a capital gain of $200. However, when you purchased the stock, you had to pay a transaction fee of $10 in order to buy it. On top of that, you paid another $10 in fees again when you eventually sold it. So in total, your fees to buy and sell that stock are $20. Now, if you work with an advisor, then you likely aren't charged these transaction fees, but instead, you're charged either a quarterly or an annual management fee or an advisor fee that might be a few $100s or more. Luckily, CRA allows us to claim not only the advisor fees on our taxes, but also the fees you incurred to buy and sell those investments, also referred to as your outlays and expenses. If an accountant is going to be filing your taxes for you, you want to be able to provide them with a detailed record of your transactions and fees, so they can include them as part of your tax filing. If you complete and file your taxes on your own, then this is how you're going to claim them. Section 3 of Schedule 3 is the area that you would use to list the capital gains or losses on your stocks. Year of acquisition is year you originally bought them, which for this example we'll assume is 2019. The proceeds of disposition is how much you got when you sold them. In our example, that was $300. And your adjusted cost base, or ACB, is the price that you paid for the stock plus the fee to purchase it. In our example, that would be the $100 plus the $10 transaction fee that we had to pay in order to buy the stock, which equals an ACB of $110. The outlays and expenses, as we know, were $10, which we had to pay in order to sell the stock. So our final gain in this case is $300 minus our ACB of $110 minus the $10 fee we had to pay to sell, which brings us to a capital gain of $180. Had we not kept a record of our expenses, we would instead have to pay capital gains tax on the full $200. While $20 may not seem like a lot right now, this number can be significantly higher if you're trading multiple times a year, or depending on what your brokerage actually charges you for each transaction. In Canada, capital gains have an inclusion rate of 50%, which means you're going to have to take half of the $180, $90, and then list that on line $19900 on page 2 of Schedule 3, as you can see here. Keep in mind, this is a very basic example of calculating the ACB on a stock trade. This can get much more complex when you're buying the same stock during different times at different prices, or the company completes a stock split. Our next video is going to show you exactly how to calculate the ACB for these more advanced scenarios. So make sure you subscribe and hit the bell button so you don't miss out. As I mentioned earlier, some of you may instead be paying advisor fees on your investment accounts, or perhaps you have an advisor for some of your accounts and you manage some of your money on other platforms. As long as those fees are charged in a non-registered account, you can also claim them on your taxes. If they were charged inside of an RSP, then unfortunately for now, you're out of luck. Assuming you paid $200 in advisor fees, this is how you would claim them. Advisor fees that you paid on your investments are claimed on line 2/2100 of your income tax and benefit return, previously referred to as your T1 General, which looks just like this. Page 3 is where you will find line 2/2100, and as you can see, you also need to complete the worksheet first, which looks just like this. Essentially, all you're doing here is you're just summarizing all of your fees so you can list everything on one line on line 22100. For the fees that we're talking about today, those are referred to as carrying charges. You would list the $200 here, and assuming everything else is zero, you would then just carry that $200 to line 22100 on your tax return. Now, unlike a capital loss, which can be used against capital gains, your advisor fees will actually reduce your total net income. So even if you don't have any income from investments this year, you can still claim the advisor fees on your tax return to reduce your total taxable income. Unlike a capital loss, which can be carried forward for future years, advisor fees can only be claimed in the year in which they were incurred. This wraps up our video on taking advantage of some of the ways you can reduce your investment taxes. Most of our videos are a bit of a different format, but if you enjoyed this tutorial, let us know by commenting below and we can make more just like it. Thanks so much for watching, and we'll see you back here next week.